Oliver, was there anything good in Deutsche Bank's earnings pre-announcement?
No, it's very difficult to find anything positive to say about it. From the timing, it came out 10 days or so early and late on a Sunday evening. That's never a great sign. The numbers themselves weren't good. They missed analyst expectations. And the shares are down 4%. So generally, a pretty low bar for other banks to follow when they report their earnings over the coming weeks.
The number that really jumps out is a terrible result in fixed income trading. And we've seen some similar, although not quite as bad numbers from American banks. Why is Deutsche Bank floundering so particularly badly here?
Well, Deutsche Bank's reasoning is that it's floundering because it's in Europe and fixed income trading is much worse in Europe than it is in the US. The US bank's fixed income was down about 15% in the fourth quarter. At Deutsche, it was about 30. Now, it remains to be seen whether other European banks will have the same problem. Certainly, the economy in Europe hasn't recovered or started recovering to the same extent as that in the States. And if people have gone into equities rather than fixed income as investors, then that will damage fixed income trading desks.
This sort of begs the question. This is a big business for Deutsche Bank. Should they stick with this business or shrink it down, pull capital out of it, pull people out of it?
Well, lots of banks have, most notably UBS, but also other big universal European banks have talked about shrinking their FIC businesses, fixed income businesses. There's lots of good reasons too. They're very capital intensive. They employ a lot of very expensive traders. However, if you believe the Deutsche Bank line and you stick with it, then there are real structural reasons to stay. Firstly, there's the cyclical reason. If people go back into bonds, then they're well positioned. But more generally, if European corporate financing moves away from banks and more towards bond markets and bond financing, as is the situation in the US, then anyone with a big FIC business will stand to benefit.
So I'm sitting here looking at my trading screen. Deutsche Bank is trading at discount to book. It's cheaper than a lot of its European peers. It's way cheaper than its American peers. There's these cyclical reasons to believe that things might get better. Things can't get worse forever. Is Lex a buyer of these shares here?
I don't think so at the moment. They are cheap, and 0.9 times book value is much cheaper than other big European universal banks. And things might get better. It's all a question of timing, though. You don't know if that improvement in fixed income, for example, is going to take place in a year, 2 years, 5 years. It's very unclear at the moment, and yet all the while Deutsche Bank's revenues are falling and it's cutting costs to try and compensate for that. There's still a lot of litigation charges, and its credit provisions went up almost across the board in the fourth quarter. So there's a lot more negatives than positives at the moment.
It becomes a painful stock to hold, as it were, while you wait for spring to come.
That's right, yes.
Thanks, Oliver.